Good morning, Facebook. We are live. I hope you are doing well. It's been a while since I've done one of these videos. Now, to tell you why, I have not been doing as much in front of my screens over the last couple of weeks because it's been just under 2 weeks since I had a laser eye surgery. So it's only now that I'm actually seeing screens clearly. They're still a little bit blurry when I look at the candles. So yeah, I haven't been doing as much active trading. I've still been swing trading and managing all the positions that I'm in. Still been looking after the guys in the trading room. But yeah, certainly for me, I've been enjoying a little bit of this good weather that we've had here in the UK and making the most of it. So hopefully in the next week or so, my eyes should fully stabilize out and I will be back. So my vision further down the line, so looking away, is much better. So it's completely sorted out my long vision. It's now just a case of it balancing out, but apparently it's fairly standard. So you'll see the title of today's review is Sell in May and Go Away. Now, some of you may have heard this phrase. It's an old adage that has been used on Wall Street for years, and it's the idea that between May and October, the market tends to, or the main indices tend to give smaller returns during that period than at other times of the year, especially at the start of the year. So that isn't me suggesting that you should sell everything and go away till October and then buy in. And it certainly doesn't mean there's necessarily going to be a crash or a move down in the market. But what you can see, if we have a little look at the S&P here, so major US indices, if we look at May, there has been less directional movement. Yes, there's been a move down to the trend line that we've got in here and the daily 50, and then we've moved back up. But in terms of the price action, you can see there were actually no further up than where we were before. So if you look back at the start of the year, we've had these downward moves and these retracements, moves back to the mean on the 50 moving average, but we've gone higher. And you can see in April we had that big move. So yeah, we did get a sell-off at the start of May, and as you can see, price has not only moved back up, it's not really pushed off with any strength. And as you can see, we're staying very tight within these bands here. So the question is, where do we as a collective within TSC, and where do we think the main indices can go next? Well, let's just have a little look at the Dow and the S&P from a comparison point of view. So if we track back to where we were at the start of May, what I was saying to the guys in the room was look initially for a close below the daily 50 moving average, which we didn't get, but also then a close below the trend line. So you can see we had that back in March, and then we had a strong move back up, came back up to the highs, a little sell-off, and then got this nice ascending triangle pattern that broke out. So at the moment, we could be looking at something similar. So price is hovering around the previous highs here on the S&P futures. So it could be that if we come up from where we are, we might have another retracement. Certainly for me, if we take these highs out, then as I've said for a long time, there's nothing in the way. Some of our guys had a nice trade back here. Some of them will have had a trade in here, and if they were using a tighter target, will have got out. Some of them will have had a loser. But if we go higher, then we could look for further pullbacks to the upside here on the S&P. If we look at the Dow by comparison and just have a little look at that and see where that is. So you can see Dow is very similar, hasn't quite made it back up to the highs. And as you can see, the price action, much smaller ranges than we had at the start of May when we had that sell-off. Similar size ranges to before, but at the moment we're not tracking up. You can see we're staying in between the bands here rather than closing outside. So again, the Dow just a little bit behind the S&P. The Nasdaq, if we take a look at that, the Nasdaq behind the two. So the Nasdaq's been a little bit more volatile. We had that bigger sell-off where we got the close below the daily 50 came up and then came down to the trend line there. You can see that that was also a test of the weekly 21, and then we closed and went higher. So you can see that there. I'll go back to the daily. So we had that, went slightly higher and created this area here. So we've come in, retested that area, had another set of two highs, just slightly higher. You can see them there. So again, you could essentially create a little bit of a resistance level there. So for me, for further upside, I would want price to break out, make a new high, and then pullbacks to the upside there. At the moment, we're sitting in what we would call a very neutral zone. So for me, anything to the short side, short term, we need to be below these lows. We've got to bear in mind we've got a couple of other lows in here, and we've got the daily 200 moving average. So it's a little bit of a neutral zone here. So really short for shorts, I'd be looking further down. And to be really clear of those levels there, and that's obviously a fair old distance to go. So a little bit, again, a little bit sideways, and as you can see, I've had that move down in May, a little bit of a sell-off. We've pulled back, but we haven't made the moves back quite to the same level as the Dow and the S&P. So as I've been saying for a while, the Nasdaq, which in the past has often led those two indices, is actually behind those there. Quick look at the DAX, because that's one of the other indices that we focus on at TSE, especially our day traders. And you can see the DAX, again, similar scenario. You can see we had a lot more upside during the first quarter and into April, and then a little move down to the daily 50. But again, we've been going sideways here. So putting in lots of retests of these highs, but price really not pushing on. So if we got a clear new high, then again, the same thing here. You could look for further upside. I'd want to be outside of these lows. I haven't got a trend line on here, but I could pop a trend line on, and I'd be looking to be outside of these lows for short-term shorts down into this zone here. We can get rid of that support line now. That's not relevant. So we've got lows just a bit further down. We've got the daily 200 here. So yeah, I would want to be below here, and then there could be short-term shorts in here down into this whole area. But at the moment, again, a little bit neutral. If it pulls down in here, I'm not interested. This is not price action that I want to be trading in. Some of the day traders would be fine in there. They could find some nice setups and use these lows as targets if price does go lower. But as a swing trader, I don't want to be trading in this. This is just choppy sideways movement I'm not interested in. So let's go and have a little look at oil, because you know as well, oil is one of our big commodities that we trade. Similar thing going on here. We had the price movement up start of the year, and then we had a little bit of a sell-off slightly earlier on oil. Then you can see we've come back up, not quite got right up to those highs. You can see I've got a resistance line slightly lower. If I go up to the daily, sorry, not the daily, the weekly, just to quantify that, you can see we got the prior highs from 2019 in here, and then we got the 2020 highs, and obviously we sneak slightly above that. The next area of resistance would be the 2018 resistance highs up here. And again, a little bit of a zone. So what we have got with oil here is a little bit of a clean air zone. I can readjust the trend line as well, but we've got a little bit of a clean air zone. So there could be some opportunities for some long trades up into that resistance, and then possibly some against the trend trades if we get up into that area there. So in terms of our swing trading group, we'll have some of the with the trend traders that would be looking for trades in this area of clean air. Some of our against the trend traders will be waiting to see if price can get up to that level, or some of our traders that are in both that would be trading both those opportunities, bearing in mind that price has just sneaked a little bit higher. Our monthly trade on oil, the orders are in, but as yet we haven't triggered. I would personally, if I just zoom in here, I would personally prefer a trade to the break of the high here, and our setup criteria gets met and we go higher because we've got this clean air area. Doesn't mean a short trade wouldn't work in this scenario, but I would prefer a break to the upside. But again, we'll have to see. So at the moment, yeah, lots of retests that we've seen here, a little move down, and then we've just sneaked that little bit higher on oil. If we have a look at euro, so as a group of swing traders, a lot of our guys have got multiple setups running on euro. Some of them will have taken profit. We had a nice setup down here, 2 entries, one here, another setup here, 2 entries here and here. So some of the guys will have taken those positions depending on their risk to reward and be out of those. Some of them will be holding. You can see that euro failed yesterday to make a higher high, came down to the 21, pushed up, failed to make a higher high. Doesn't mean it won't. And some of these guys will have stops either in profitable positions or break even. For me with euro, not a lot that I would want to do unless it was, again, able to get clear of these new lows. For me, with euro, if we take these highs out, so we take the May highs out, you'll see I've got a couple of resistance lines in here. We've got the yearly highs just here. This would be a nice target, and this represents a target for some of our guys right here. The next against the trend area that I would be looking at would be up at the 2018 highs just here. So just to give you a little bit of context on that, I'll go up to the weekly chart so you can see it here. So there's the 2018 highs up here. There's the 2021 highs. So I wouldn't be looking for a reversal at 21 highs. Some of our guys would. Again, that depends on how you would look at it. They would look for some divergence up there as well to take the short trade there. I personally would be waiting for price to get up to this level. But the 21 highs, the 2021 highs, do represent a profit target for some of our guys there. So again, euro just stuck in between, hasn't quite made that higher high. It's got the higher low. So again, if we take the lows out, I'd be looking towards these lows or the 50. If we take those highs out, I'd be fairly confident of a move back up to the 2021 highs. All right, I'm going to leave it there. So yeah, that's just a little look at euro, oil, and the major indices. As I've said, we'll see what happens. I'll be back again next week with a market commentary, and we've got something new coming out for those of you that are free members. You are in our private members forum. So what I'm going to be doing, as well as Finance Friday, that is coming back on the 11th. We're interviewing Martin, who's one of our TSC students, one of our graduates who now trades full time and helps some of our guys in the day trading room. What I'm also going to be doing is posting up videos from our trading room. So taking a 15-20 minute section of one of our 2-hour live training and coaching sessions and putting that, but it's only going up in the private members forum. So make sure if you're listening to this and you're not a member, go to tradersupportclub.com, click on the blue Start Right Now button, sign up as a free member, and then go through and go to the private members forum, because that's the only place the lessons from the trading room videos are going to come up. They're not going to be coming here on the main Facebook page. All right, guys, it's good to be back. I will be in touch again. Enjoy the weather if you're in the UK, and I will catch up with you again soon.